Assalamu Alaikum and a very warm welcome to the Stock Sense Morning Brief. I'm Malik and it's Monday, November 24th, 2025. We're here to bring you the latest insights and updates from the Pakistan Stock Exchange, helping you start your trading week informed and prepared. Let's dive right into how the market closed on Friday and what we can expect today. On Friday, the KSE 100 index saw a decline, shedding about 834 points to close at 162,100. This represented a drop of roughly 0.5%. This was a reversal from Thursday's session, where the index had posted a gain of about 711 points, closing strong at 162,900. Looking at Friday's overall market participation, we saw 145 scripts advance against a larger number of 289 decliners, with 42 remaining unchanged. Total traded volume for the main board was quite active, reaching nearly 768 million shares, with a total value of almost 28.6 billion rupees. Now, let's zoom in on the sectors that had the most impact on Friday's performance. The oil and gas exploration sector was a notable drag on the market, pulling the index down significantly. Similarly, commercial banks also exerted downward pressure, contributing to the overall negative sentiment. On the brighter side, the jute sector managed to provide some positive momentum, pushing the market slightly upwards. From a technical perspective, the KSE 100 index is presenting a somewhat mixed but generally positive picture. Most of the daily moving averages, especially the short to medium-term ones, are indicating a buy signal, suggesting underlying bullish sentiment. However, the Hull moving average is signaling a sell, while the Ichimoku baseline remains neutral. When we look at the pivot points, the classic pivot stands at around 162,650. Immediate support for the index can be found near 155,300, while resistance is seen closer to 169,000. Investors will be watching these levels closely to gauge the market's next move. Moving on to some important corporate announcements for today, November 24th. Jubilee General Insurance Limited has a board meeting scheduled to consider matters other than financial results. Meanwhile, TPL Corp Limited is holding its annual general meeting in Karachi today at 11 a.m. For investors looking at distributions, today marks the last day of entitlement for a few companies. If you're looking to be eligible for announced distributions, you need to purchase shares of these companies by the end of today's trading session. This includes Jahangir Siddiqui & Co. Limited and iTans Technologies Limited, both of which have announced no distribution. However, First Treat Manufacturing Modaraba has an interim distribution of 15%, and Live & Pharma Limited has a rights issue of 21.496%. So, if you're interested in these, today is your last chance for eligibility. In macro developments, the economic news front presents a mixed bag. On a positive note, tobacco companies are reportedly slashing demand for the upcoming crop, which could lead to improved margins for major listed players like Pakistan Tobacco and Philip Morris, as they might be able to purchase surplus at lower prices. The government has also been urged to cut taxes ahead of the 5G rollout, a move that could significantly benefit telecom operators and mobile device manufacturers by reducing costs and accelerating adoption. Furthermore, there's been a substantial 123% surge in imports of car assembly kits, signaling a strong recovery in local auto production and sales, which is good news for the automotive sector. The cabinet has also cleared a plan to divert 24 to 29 surplus LNG cargoes from Qatar, which could positively impact Pakistan's energy supply strategy and potentially benefit gas distribution companies. However, there are some headwinds. Pakistan's food import bill has jumped to about $3 billion in the first 4 months of the current fiscal year, a sharp 31% increase. This growing reliance on imported food, particularly sugar and edible oil, is a concern for the country's current account deficit and exchange rate stability. Additionally, the Economic Coordination Committee has decided against supplying gas to 2 SNGPL-based urea fertilizer plants, which could impact their production capacity and the overall supply of urea in the market. We're also seeing reports of the Afghan border closure due to significant losses, which could disrupt cross-border trade and logistics. Looking at institutional flows from Friday, November 21st, we observed a slight net selling by foreign institutional investors amounting to about $0.88 million. On the other hand, local institutional investors were net buyers, matching that figure with purchases of about $88 million. Diving deeper into the local activity, banks and DFIs were significant net buyers, adding about $2 million to their portfolios. Mutual funds also showed strong buying interest, with net purchases of over $1.4 million, followed by insurance companies and broker proprietary trading, which were also net buyers. Conversely, individual investors were notable net sellers, offloading stocks worth approximately $3.8 million. Foreign corporates and overseas Pakistanis also showed net selling. This indicates that while local institutions were providing support, individual investors and some foreign segments were taking profits. My take for today is that the market is likely to react to the blend of positive corporate news and ongoing macroeconomic challenges. While some sectors are showing resilience and positive catalysts, the broader economic concerns, particularly around imports and trade, will keep investors cautious. The institutional flows suggest a shifting dynamic, with local institutions stepping in to absorb some of the selling pressure. We could see continued volatility as the market digests these developments. And that wraps up your Stock Sense Morning Brief for Monday, November 24th, 2025. Thank you for tuning in. We'll be back tomorrow morning with all the latest updates to help you navigate the PSX. Until then, remember to stay informed and make wise decisions.